And we are live. What's up, guys? Today is October 25th. It's actually 3 a.m. I don't know, couldn't sleep. So I got up, decided I could probably recap whatever is going on today. So here's what we're looking at. Also, I'm in an Amazon, so that's right, Amazon. So today, this week has really been something. And I think, obviously I want to go through it. I want to cut through everything that kind of happened. Uh, Obviously today, if you can tell by the title of this video, I did pretty well. What I ended up doing today was at the end of day yesterday, I put in $75 into a 300 Tesla, kind of a YOLO, actually. Because no one really expected Tesla to go up, but there were a few pieces of information that I thought was kind of interesting, and I think that's what actually helped decide kind of what went down. So we're gonna have to do this. Okay. Some of the things is a lot of people were very, very, very bearish on Tesla yesterday, and that's not actually the reason why I made this decision. I was actually a little bit bearish as well, but I started looking into specifically their analytics. One of the biggest deals that I kept thinking about was the Gigafactory in Shanghai. Now, that was kind of super important because it has everything to do with their production scaling, and their production scaling is completely dependent on a few things. And if you can figure those things out effectively, that's what allows, I think, Tesla to be an extremely effective company. However, they haven't been up until this point. One of the biggest problems actually has been the CEO, Elon Musk. He's while everyone touts him as a pretty smart dude, and he is, but the way that he had been running everything for a little while had been very problematic because he was basically the equivalent of a anecdotal ER. And what I mean by that is that he would give his own statements constantly about, how good their production is and how good, these different pieces of information are. And while, he was probably right on a lot of things in terms of future thinking, he tends to get a bit ahead of himself. And so he'll announce quite a bit ahead in advance of what expectations are for earnings, what's happening here, what's happening there. He gets ahead of himself essentially, and as a result, there's a bunch of Elon Musk fanboys, so to speak, and they tend to kind of help rally the stock quite a bit. Now, as you can see, yesterday or 2 days ago, yesterday for me because I'm still dead a little bit, but if you check it, you can see that we closed around 254, and the price of my option that I bought, that was it was a 300 November. It was a 300 November 1st, so I had a week on it just because I didn't really want to face the same type of IV that everyone else was getting. So you can kind of see that it landed it right in the money, which is kind of, I wasn't. Okay, so there's a specific reason why I chose 300, so I'll get into that. But firstly, let me continue on what I was saying earlier, which was a lot of the times people were okay. So everything that was happening with Tesla was more or less this earning was extraordinarily pivotal, and that's what I had realized earlier in the day, around actually here on this day. So I realized, I was thinking, okay, so what's going on with Tesla? What would a terrible earnings report do? Well, you have to think back to all the articles about by CNBC, by any company really, that's explaining that Tesla, and this is very, very true, Tesla has an incredible cash burn, and they very rarely take profits. So I went into a Bloomberg terminal and I started looking into their analytics. I can't open up the Bloomberg because I don't have the Bloomberg terminal here, so I can't open it up here. But basically, I went in and I looked at the analytics for the company and their EPS. Their EPS, according to Bloomberg, was actually quite a bit. It was about 50% or 100% better actually. And they were obviously reported to report loss, obviously, for this quarter. It was heavily higher than they were going to do reportedly better, according to the Bloomberg. And I checked their analytics, and I was looking at their gross profits, I was looking at their revenue, I was looking at their just overall sales and things like that. And what I had realized is that if they don't make it this time, the company is dead, completely dead. And that was kind of a bet on my part. I mean, obviously I didn't bet very much. I only bet $75, and today I sold that. It nearly went around. I think it had a high of 1.3. I wasn't able to sell it there, but it was around 1.2, $1.3 thousand. So that is a win on all accounts. But the idea here is that if Tesla hadn't made it through today, the company would be done. That would basically be the end of it. Because their cash burn is so incredibly high, they wouldn't have enough revenue in order to support the company's growth. See, we hit 389. We've almost hit 400 before, and we weren't able to re-establish that area recently. We've been extraordinarily down, and this is all because of the cash burn. This whole thing is a fear of cash burn. This started back in December of last year and now ran all the way into May and then kind of came back up, holding up in terms of what their expectations for earnings were. After the Gigafactory, this kind of happened, and now reporting that the Gigafactory has been doing well. Additionally, another piece of information that you should think about is the fact that Elon Musk, he's very Trump-esque in this sense, and he's notorious for kind of speaking about his company quite fervorously, and he didn't say a goddamn word, and that was my biggest single setup. So I didn't play. In a separate account there was a YOLO that was not done by me, but I know who they are, and I advised them on this position, and they placed about 700 something into this week into an in the money 260s, and they put about $700, and as of that this morning, they were able to lock in about, what was it, about 3,800. So that's not bad. However, but there is an important thing that I paid about a tenth of what he paid, and I earned about a third or about a fourth of what he got, which means the numbers are adding up. I made about double in terms of percentages, nearly. And the reason that's important is because it is important to figure out where the IV strikes the best, where it doesn't, where it hurts the most, that kind of thing. So his position, had he purchased mine, would have been up about $10,000 today. And that is what next time I'm going to ensure kind of goes down. So beforehand, I'm going to definitely drive into the prices before I actually advise anyone on anything. But he wasn't able to get out of the position by the time that I had determined that there was a better position to be played. And so, yeah. And also, obviously, one of the biggest decisions was 300 is a very powerful level. If it was going to go up by about 10%, that was the expected move. The expected move down, actually. The expected move was not up, and that was my biggest advantage here, was that no one was expecting this. And like I said, Elon Musk hadn't said a word until it was released, and then you saw that, hey, this is the reporting. So he was kind of boasting it, and rightfully so. It's fucking awesome, actually. It's amazing that the company had made it this far. The company's cash burn now, and if you look into the 2020 and the 2021 estimates, if you look at those, these next 2 years are going to be very, very, very good to this company, I think. And, and at that point, actually, I would want to really, really just become a long-term person. After all of this information, after the fact that they are finally profitable, something has changed, and for that company, and I really like that. But let me get into actually the trade that I made. So I don't have the analytics up here, but basically I bought it on a different TD account, but basically I paid $75 on an account, and that account only had about I want to say about $230 in it. That was just an account like an old account that I hadn't touched, and so I was like, all right, let me at least see what I can make out of that one. So we have about $700 that turned into $4,000 in a different account. Now in this account that we have had $75, and I'd sold it. And so it hit a high actually of 1,100. So in the after hours actually it hit about 1.3. I hadn't sold it for around 1.2. It hit it hit close, but no real cigar. But hitting it around the high is roughly where I kind of was. Now, the important thing about this was the bid and ask was really like a lot on this, and that is kind of what screwed off a lot of people on getting up in this. You were able to make, like 1,000 something%, but then you got killed on the bid. So that is something to watch for, especially for something like this. You have to. So it's for me, definitely a lesson that I had to keep an eye out for was that I could have gotten filled at this bid, and I would have sucked ass because I would have been down an additional like $300-$400 instead of getting the full 1,000. So that kind of stuff is, I think, pretty valuable as far as taking these types of trades. You want to be ahead on the ball for that. So yeah, that keep those in mind. I think when you get into these, what your strike is does matter. And yeah, so that's my Tesla play, and I think that was pretty awesome. I didn't really expect it like that, the way that it happened, but the expected move filled. The IV didn't crush me, so all in all, great play. Could have been better, could have been bigger, but that's kind of the story of everyone's life here. So that's kind of just how you deal with that. So now another thing I want to get into are a few of these plays. So let me get into the intraday for some of these. So this is Tesla, obviously. So it started coming down. I think Tesla's going to do a continuation. It could come down a bit more, but then I think we're in it maybe 285, 280. 280 would be a lot, actually. But 285, 280 seems probably the most reasonable. If it comes down that far, and then we'll do a continuation after that fact. Now, additionally, before I get into the other place that I'm currently in, you should look at Beyond. Beyond has been on a down run. It hit 100 today, hit 95 actually today, hit 101 back down. Beyond has a lockup that's expiring very, very, very soon. I think it's next week, actually. So if you take that, then if you get into that lockup period, then you're going to get an opportunity to kind of figure out what the actual price of that stock is. The same thing happened with Tilray about a year ago. And so after the lockup, the stock kind of tanked. And so, that's what everyone expects, that people who are in stocks just inherently will leave them because they don't want to be in them. The value of the company was very overvalued. Now if you actually look at it, we hit a percentage change of like 400%, 300%. But then now it's only about 100%, which is still a lot, but that's not as high as the company was evaluated to be. And I think in the long run, these inflated valuations are really not good for a company in general, because when it artificially raises expectations for a company and then just brings them way the fuck down. I mean, you look at this earnings right here, this ruined it for them. Basically, this was when everyone realized, oh shit, this company's overbought. It's evaluated. And the valuation just makes no sense. It's not reporting billions of dollars. It's not returning billions of dollars the extent that it was expected. So why the hell are people pricing that in? And yeah, that was a very smart reaction. We even held one of the things that held up one of our accounts was several this is the 4 hours, right? Months ago, actually, we had purchased, I want to say, I'm going to find out where it was exactly. I think around here, around this day, 8:30, we saw that, what do you call it? Around here, we saw that, there was some weakness and stuff like that. So what we decided was that we were going to basically what we ended up actually really doing was we bought November, so it would be expiring next week, I think, November puts for 60. So obviously those weren't going to hit, but what we did notice is that the cost of those were at 60, and they kind of fluctuated in the time. They hit 60 around here, around several, I don't know, I'm trying to remember when exactly, but fairly recently the value of it had decreased from 60 when we owned one of them to about 19 cents. So $60 to $19. And then we purchased another one, and then it came way the fuck down. And when it came down in this final run, this was a gap fill right here. When it came down during this point, the position had earned, so we owned two of those at that point. They had all gone up, both of them had gone up about 120. So we had earned about $240 from that one long position. So as a result, that held up part of the account while we were in BA. And now BA is the other play that I want to look at. And I think and this is really important, that for me at least, that it actually hits right now, is that tomorrow, since tomorrow's Friday, I need the stock to fall into 350. If it falls into 350, then my position will expire, because I'm holding a put credit spread. So if it can fall at 350, land above its strike, I can get about $300-$400 out of that. So that would be really good. If it doesn't work, I'm probably going to roll this over, because I know it can hit eventually. So I will definitely roll it over if need be. But we'll have to wait and see how tomorrow behaves, and then I can roll those over at the end of the day if it just doesn't work. I'll probably have to pay a little bit of a premium in order to collect that, but I mean that's fine. I mean, and in order to make a little bit more credit, you can widen the strikes. You can do whatever you need to do, but that is probably what I will do. I'll probably roll them over straight. 350 is a good level. It'll probably go a little bit beyond that anyway. I mean, it moves so hard down that you have to anticipate that it'll probably come back up. So that is my BA. And then, so out of these other credit, these spreads and stuff like that we did, one thing that hit us really badly was McDonald's. Now, what we said for McDonald's was, that's not even a stock. Okay, there we go. So once it hit around, man, it really came down. But the earnings brought it down to about 200. And what we figured was, if you look over here on this screen, if you look over here, there's SMA right here is a pretty strong support. Now, what we wanted to do is, or what we hoped would happen was, the SMA would act fairly strongly, and then it might bounce back up and just last a few more days above 200. Unfortunately, it did not do that, and it came completely down. And you have to understand actually why this came down. It's not entirely, I think, because of these earnings. I think it has to do with rotations. As these other stocks start to pump, these value stocks start to either lose or gain value. So because these stocks have been doing really well, people are coming out of McDonald's, going into Amazon, not Amazon, but going into Tesla, going into INTC, those types of stocks. And that is really, really what probably is killing it right now. And additionally, when you look at this stuff, you kind of have to look at how it behaves around certain levels. Typically, the SMA does act fairly strongly, but you can't rely purely on technicals, right? So that is, the concern here. Can this thing hold up where it does? Is it consistent? And it was not consistent this time. It actually kind of was, and we didn't see the sign there. That was dumb. And we did a similar thing. I did a similar thing regarding technicals on Amazon, but now I actually learned my lesson. I'm still walking away profitable, so I don't really mind that too much. That setup was really well done. So I'll explain that in a minute. But we have this level. We had this doji that pulled on it, so it pulled back on it. We're hoping that this would be the one that brings it back up, but no cigar. And which sucks, because the day before we were doing pretty well on it. We were up like 30-something%, but now we're down 120% on it because we've dipped into the collateral. So the cash collateral has pulled us down about $120 total in this position. And that's terrible. That's like terrible for a call, for a credit spread especially. So keep those in mind when you do those. Don't put anything that risky, and watch your cash collaterals. Now, another thing that we were in, I've sold this recently, is we eyed this after Netflix kind of came down really hard. We were like, all right, this is a huge move. What do we do? And I sold the 262 credit spreads, and now the stock moved so far to the money that I was able to basically collect on the entirety of that. So that was upwards of $60-$70. And so, that doesn't sound like small amounts, but you have to understand that these are very, very small accounts. These are like $200 accounts. And the reason we have, instead of having one huge account that's like, some $20 or some $10,000, $15,000, we figure, okay, why don't we take a bunch of small accounts and a bunch of little accounts and kind of work around them individually. And that's what we're doing. And the reason we're doing that is because we want to because when you're going from a small account to a big account, when you're trying to grow a small account to a big account, you have to employ certain strategies to do it. You can't just straight buy shit. It just doesn't work. That's a short term gains are usually disguised as long term losses. So you have to kind of be smart about everything. And that's what we're trying to do. So we're trying to listen. So based on that position, we're gaining 100% of our original capital investment into it, and then we're going to see, what our return is from there. So we put against it, we put 150 or 250 cash collateral. We made back, $60, $70, and that's a decent amount. It's not fantastic, but you do that several times in a row, and then all of a sudden you have a $500 account. And then once you have that and that setup, you can actually start taking much bigger spreads, much